Sibanye Gold owns and operates gold mines and it's expanding into the platinum sector, as you said just a moment ago.
Indeed. It currently has platinum assets like the ones that they acquired from Aquarius and are acquiring from Anglo Gold, not Anglo Gold, Anglo Platinum, but they are now trying to buy Stillwater in the United States.
Market cap 30.1 billion rand, a PE of 12.3, dividend yield here of 4.4%. Before we go any further, let's put this share price graph up. And we can see the consequences of this latest news flow around the Stillwater acquisition.
Yes, and I guess that has been the cause of some excitement, although in part the run-up earlier was just because it was doing very well operationally. It has the benefit of those old, rich, what they call KDC mines, which is Kloof, Driefontein, and what's the C stand for? I can't remember. I'll remember in a minute.
I can't.
And those are high margin gold assets, particularly the way that CEO Neil Froneman mines them, which is to get into the rich areas and not worry too much about life of mine.
Well, he's got the formula right. Pretty choppy looking share price graph though. I mean, when did you buy in, Joseph? Just give me a sense.
But I think when you look at it, it was around 26. But when you look in terms of basically the chart, it still shows an upward trend. Everybody obviously got a knock from last year after they all surprised, in terms of performance. But if you look in terms of the return comparing with others, that's 83% return in terms of growth. So that's really fantastic for any person or any investor. But let's look at what they're doing. So they got all these mines. People thought these are distressed mines and possibly will be more difficult. They are more deeper. Got them, turned them into profitability. Now they have expanded the business. It's becoming a global business. The question analysts have is that what they're trying to purchase in the US, obviously they got a go-ahead approval, but they still need to go back to the shareholders. So you're looking at about what, 2.8 or $3 billion, which is basically almost higher than their market cap
than
of
their
the share.
Current market cap, exactly.
So people are saying, what is the rationale to do that? If they get it right, certainly I think investors will be very happy. The dividend yield also quite nice, which is 4%, and the PE also the cheapest. And they compare year to date in terms of performance, 23%, almost the same as Goldfields, but their margins are far much better.
Are people worried right now that they're going to overpay when it comes to the Stillwater acquisition?
No, certainly I think there's a little bit of worry and there's a reasonable cause of concern. They've done very well from a management perspective and obviously their strategic acquisition, and I think they're wanting to move more away or concentrate in palladium. I think this deal will bring that to the fore. So certainly I think people will be worried to say, are they paying too much? And only time will tell.
Yeah, because Stillwater was trading on the US market, so they paid a big premium to that. And remember, those are highly mechanized, very efficient mines, mining more like greenstone belt type deposits, which are harder, trickier, smaller, as compared to the deep level seam-based underground mining.
So perhaps the question is, will Neil and his team be able to extract the same value?
I don't know. I think it's a big play on the idea that platinum and palladium and the whole complex of prices are going to move higher thanks to sustained auto cat demand and economic expansion in China and all of that sort of stuff. And that the home base, the older, tireder underground assets, gold and platinum, are going to pay for all of this, and that the group will emerge in time into a much higher commodity price environment. So that's really what this is all about. Ultimately, it's a bullish bet on the actual precious metal prices.
You don't want to be out of this action if they get it right.
No, certainly. I think obviously the history proves that they've managed to do very well in a very short space of time, and they become very competitive and possibly the best war sorts gold stock on the JSE. I will basically power on, obviously at the right price. If the share price comes down a little bit, I think we'll be able to.
Would you buy more? Is that your level of conviction here?
Yeah, I would add on.
I think I must look again, but it's been bouncing around. We got ours at like 29 or 30 or something, and they're at 35, and then they were back to 32. The most recent announcement was to the fact that they're going to look to raise less capital by way of a rights issue and more from debt, and that was because the cash flows, given the weaker rand since the debt downgrade, have been stronger. But again, we mentioned the top of the show.
That should be well received by the market.
I think so. Although, it obviously speaks to the short-term nature of this whole deal, because it really puts us in the zone where it's kind of like a better deal if the rand is weak, but then the rand isn't weak, and it kind of flops.
It just shows how
goes.
vulnerable, what you're saying is that how
Yeah.
vulnerable the deal is to external factors beyond Sibanye or anybody else's control.
Exactly, because what it will need is the South African cash flows converted into dollars in order to service global debt, which is quite a scary concept if you think about it.
So are we going hot or not on Sibanye?
Well, we're in it, so we're saddled up and good to go.
We're hot, we're hot.
You know, we're hot on it, yeah.
I'll
Joseph,
be hot
you
on
are
it,
hot.
yes.
In fact, you are so hot that you'll buy more if it goes down.
Yes.
Highly convicted.